Good afternoon. It's February 19th, 2026, and today another range day. I don't think it's an inside bar. It looks like it broke below yesterday's low, but just another doji. Looks like we're in a weak upward trend. Uh, and right now we're just going back and forth between the 100-day moving average and the 21-day moving average. So here's how it looks on the daily chart. We were in a broad bear channel. Uh, there was a small gap above the EMA right here. Before we pushed down for a final leg, you can see we couldn't make it to uh, the lows of this channel. And so I think if you're looking at the 17,000 tick chart, when you get that weak inside bar, that's not a bad place to go long. And you could make a nice little move if let's say you buy the close at 68.58. Uh, Even if you get out right here, that's a 14-point move. If you get out, this kind of looks like a buy climax. You get out right there. Uh, it's an 18-point move. So that's something to think about. But let's look at the 2700 tick chart. Just a range really. I just extended my range from yesterday. So if you want to draw, I think that's what prices were doing was they were staying within the lines from yesterday, the support from yesterday, support and resistance. And you can see looks like we did tick just a bit lower than yesterday's price action. Yeah, so this is a little bit lower than that low. But anyway, let's take a look at this. So a strong move down in the overnight, and then you get this move down. It's pretty weak. Probably a little channel in there. Yeah. So you get a broad bear channel. So you got a spike and channel down, and I think this is you'd be at your computer probably here. I think this is a great place to go long. Or a market order. So you might think, oh, how would I know to go long after five bear bars, um, all of them strong and closing near their low, except for this one? Well, we've been range bound for let's see, 5 days. Let's just call it. We've been range bound. You can see strong bull moves. We have a gap above the EMA. This kind of looks climactic. It's a huge bear bar. So just buy a small position and look at how big of a move that would be back to the EMA. So let's just say you buy a third. So yeah, if you bought the close of this, uh, what is that, 65, and rode it back to the EMA, that's an 11-point move. So that's another reason you might want to just buy that, is because of how far away from the EMA we are when we've been ranging so much. So anyway, let me zoom in. All right, so we're just going sideways. A lot of overlap here. You want to be careful. And so we break out to the low side. You could look at this as a failed break out of this range. I think that's a good way to look at it. To me, this looks like the range. So I like this. I like this, man. Look how far away from the EMA you are there too. So you could buy that. And again, like if you buy a third of your normal position, you can scale in if it goes lower. Or if you're looking at the daily chart and you're like, nah, I don't think we're gonna get a range day. I think we're gonna get a bear move. You just get out. You just get out down here. So you're. It looks like to me your reward would be greater than your risk. So let's say you get out right here. Let's even say 48. Let's just call it 48. If you enter here, 48, that's 9.5 points, and your reward is about 10 points, right? Or maybe close to 10 to 11 points. So about a 1-to-1 risk reward. That's great. And here you get a classic second leg trap. First leg, second leg is stronger. And then it goes down, retraces, but doesn't retrace 100% of this second leg. It actually goes higher. So is there anything in here? I don't really think so, unless you are of the belief that this is the bottom and we're going higher. This does look like a channel. Yeah, that's a bull channel right there. So you could argue for getting in long here. I don't think that's a bad idea at all. The reason I don't think it's a bad idea is because this was a very weak bear trend. This kind of looks like a climax. You do have two fairly strong bull legs. I mean, if you, uh, now we're above the EMA. We didn't create a gap here. So I mean, it's an aggressive move, but if you're just trying to, get to the top of this bar, which is the top of the range too, yeah, I think there's reason to maybe like enter on a limit order here, anticipating this being a level of support. Boom, go to the top of the um, channel. Might be a measured move as well. Sell off, bounce again. Boom, we get a break of this bull channel, and we go sideways. There's another. So it's really, I'm seeing a lot of trending trading range. So that's the type of day it is. Trending trading range day. So we don't really, this level of support isn't established at this point. It becomes more clear over here. You get another test, and then you get another one. So I mean, this might be an area where you enter after this strong bull bar, but you're going into the midline, so I'm not crazy about that. Then we get some, resistance at this prior high. It goes lower. Not really crazy about anything else in here. I think this one is very reasonable to get long on. It's like you got a first bear leg down, second bear leg down. I think it's reasonable. Again, here you're going into the midline of the range. Not a good idea. I think you could argue for this one, but I mean, it's no bull body. Could be a trap, but it's far enough from the EMA that you'll probably get a scalp. And then we break out to the low side. Form this double bottom. Not crazy about it, but you get a double bottom and a higher low. This is another aggressive one. I wouldn't criticize anybody for taking this, but the EMA is right there. It's a little tough. Pulls back to this level, finds resistance, get this lower high. That's a big bear bar. If you think you're going to test these lows, I could see why you would take this, especially because it looks like we get 1, 2 bull legs and 1 bear leg. So if you're expecting a second bear leg down, you could argue for that one. And you get this spike and bear channel. If you see that, it's probably a little more broad than that. Like something like this. Get a break, move to a new low. That is a sell climax if I've ever seen one. So I really I would consider this. Look how far away from the EMA you are. You have a break of this broad bear channel, move to a new low. This is compared to the last 15 or 20 bars, this is a huge bear bar. So to me, that looks like the sellers are exhausted. I'd ride that back to the EMA. Get a higher low here, boom, bull spike and channel, sell off lower high. I don't like these levels. This doesn't really look like an established level of resistance, but it really is. It is. So I mean, some people might like this, but I just feel like you're in no man's land. You're near the end of the day. I didn't trade this, but this looks like a pretty nice day for trading. Uh, Especially for a trending trading range day. These usually aren't that clear, but obviously it's easy to say in hindsight, but these look like some pretty good setups. So hope everyone had a good day. I'll be back tomorrow.